Θα προχωρήσουμε λοιπόν στο πρώτο keynote speaker της ημέρας. Όπως κάθε χρόνο και σε όλα τα συνέδριά μας, καλούμε εκλεκτούς καλεσμένους από τη διεθνή σκηνή για να μας δώσουν το στίγμα και να μας φέρουν στο τραπέζι μας αυτό το διακύβευμα του μέλλοντος. Θα επιτρέψτε μου να γυρίσω στα αγγλικά για να καλωσορίσω τον πρώτο μας καλεσμένο, ο οποίος το επίθετο του διαβάζεται Silke και όχι Silke, έτσι, νομίζω το διατυπώνω λάθος. Daniel Silke is renowned for his industry-leading expertise as a political economy analyst and his dynamic keynote speaking engagement. As the director of Political Futures Consultancy, headquartered in Cape Town, South Africa, Silke has established himself as a sought-after speaker for major global blue-chip companies, delivering exceptional keynotes, webinars, and workshops. Silke's extensive client portfolio boasts prestigious names such as Bank of America, Mazars, Barclays, Mario International, Oracle, Cisco, PPC, Grant Thornton, Gartner, Momentum, Sanlam, Estée Lauder, F&B, BMW, and among others. Silke, the stage is yours. We're all waiting for your speech.
Thank you. Kalimera. That's about as much Greek as I'm going to do with you this morning. So I don't want to do what speakers do, which is try to speak the local language, and they just can't do it. So good morning, everybody. Kalimera. Lovely to see you. Thank you, KPMG, for inviting me to come and talk to you at this very important CEO forum. I'm delighted to be here in Athens. It is my second time only in my life in Athens. I've been to Greece a number of times, and I'm happy and excited to be with you, and excited to be with KPMG. It's a beautiful room, it's a beautiful audience, it's a beautiful day outside. I'm not quite sure whether I'm going to give you such a beautiful message about where the world is at the moment and where I think we are going, with a few sort of predictions as to some of the big themes that we are looking at from a geopolitical point of view. I think your theme of your conference in terms of resilience, in terms of confidence going forward in a very volatile global climate, it's a very timely theme, a very useful theme, but of course the reality, in a sense, of the world is that we have all been through something of a roller coaster ride over the last, we could say, since President Trump was inaugurated. I think we're constantly on a roller coaster ride, but somehow those rides have got just that little bit more dramatic, just that little more dangerous over the course of the last 5-6 months or so. And I think if we're going to live and we're going to operate and we're going to succeed in business ultimately, we're going to have to navigate those ups and downs, just like those guests enjoying that roller coaster, if you can ever enjoy a roller coaster, just like they are doing. And it's just a question of becoming that bit more used to operating in this environment and, of course, preparing yourself for those themes and trends that are likely to impact your business over the coming years. And it will be perhaps over the coming years. There's no end point, in a sense, to this roller coaster that we're on. Now, I must say that there are always, every issue, in a sense, seems to lead back to the United States. We'll be discussing the United States in this particular talk and various other factors as well. There are a lot of issues that I disagree with President Trump, but I'll tell you one thing that I do admire, and that is his ability to dance, simply because that is about the same ability that I have to dance. And for anybody to be prepared to do that in public, you've got to give credit where credit is due, everybody. So indeed, this is a leader, I think, who's not afraid to show ultimately his real self in front of the cameras. Now, all of you have been well aware. I showed a picture of a roller coaster in that first slide. I mean, the real roller coaster, in a sense, has been markets over the course of the last few months or so. The issue, of course, of tariffs, and we'll come to that in a moment, have really provided markets with a huge degree of volatility. Those of you that were looking at selling your portfolio after the introduction of Trump's tariff announcement, hopefully many of you just remained invested. Otherwise, you would have indeed been rather unhappy about what has been a fairly rapid recovery, and in fact, markets still looking relatively good despite a large degree of global volatility at the moment. But I think, you get the idea that, and I think even for you in business, and as much as you would want to prepare, and as much as you would think that you can prepare, it's extremely difficult to make predictions about the world at the moment. There's that well-known saying, it's tough to make predictions, especially about the future. And I think that's very true right up until now, because even in preparing presentations that I do for clients, what happens the hour before the presentation and what happens the hour after the presentation often can change the nuances, can change the themes and the directions of what one is saying. So all I can do is give you some big picture ideas as to some of the change that we are seeing and the impact of this change on both politics and also on the economy. Now, I do think that for us here in 2025, we have to recognize that the issue of the COVID pandemic has had an effect on all of us. It's had an effect on business. It's had an effect on geopolitical risk, on economic risk, and we are still not just climbing out of that post-COVID environment. We are also trying to adapt to some of the challenges that brought us, particularly when it comes to supply chains. And I think for businesses across the world, the big shock to the system in terms of the pandemic was obviously how to secure more reliable supply chains and how to diversify your supply chains. Now, that issue was as a result of COVID. The issue today about diversifying your supply chains is not pandemic related so much. It's more, of course, about geopolitical risk. It's more about the role of tariffs and how tariffs can impact supply chains, particularly those coming directly from mainland China. So we are, in a sense, climbing out of COVID, but it's the legacy of some of those challenges still remains very much with us today. And it's not just a COVID issue that affected the global economy. We can have a look at the American middle class in particular. We can also compute the cash, the reserve cash that the current generation of Americans have compared to their families, compared to their previous generation. And for many American middle-class families, they are earning less. They are earning less today than their previous generations, their parents did. There is, in a sense, within the United States, something of a crisis in the American middle class, and the percentage of people earning more than their parents at 30 years old has declined and declined quite dramatically, leaving a population feeling that bit more insecure. And the insecurity of people, you know this from, it doesn't matter where I stand in the world, whether I'm here in Athens or whether I'm in Auckland for that matter. Insecurity leads to political change. It leads to dissatisfaction with elites and dissatisfaction in particular with leadership. And that dissatisfaction, and it is a US phenomenon, but I would also argue that much of these issues can be found in other parts of the world as well, here in Europe as well. Issues of migration lead to insecurities and concern. Issues about high property prices in particular, and I'm well aware, particularly in this country, of the amount of young people still living at home or living with their parents. It's a phenomenon not just here in Greece, but elsewhere as well. That insecurity about being able to afford a degree of independence, it plays itself out in the psychology of young people in particular and adds to a society a little bit more concerned about where they are, about where their future is. The issue about robotics and technology and the ability of technology to take jobs away from human beings. This is going to be one of our great stresses from now and into the future. That creates uncertainty as well. Outsourcing. which of course was the flavor of the month 20 years ago when we all spoke about globalization and offshoring. That has also created uncertainty in terms of the job market and, of course, rising inflation. We saw that coming through as a result of the pandemic and supply chain constraints, but inflation certainly doesn't have its roots in COVID. We've all had periods of inflation well before COVID and will after COVID as well. So there are all these factors creating this high degree of insecurity. And yes, I'm showing a picture on the screen from the United States, and that's actually from the Trump first administration, from an election rally of Donald Trump. But the issues on the little placards there at the bottom, as strange as they might be, and you might disagree with some of them, just indicates this deep frustration with so many issues in society at the moment and in the United States. Certainly, we have a position where across party lines, there is a frustration. There is a degree of disappointment with leadership in particular, and there is a feeling of an unknown as to what the future may bring. And as I've said, it's not just a feature of the United States, it's a feature also certainly here in Europe, and I think we find it in other countries and in developing countries as well. Now, let's park that off for the moment and talk about the next big trend and theme that also creates a degree of insecurity in the United States, and perhaps for many of us in the Western world as well, and that is the rise of China. Perhaps it's the most dramatic macroeconomic theme for all of us in the world at the moment. A shift, in a sense, away from the West in terms of GDP growth, in terms of size of the global economy, and a shift away to China. And again, the charts are there and the graphs are there. And if you can't sleep tonight after this amazing conference this morning, I will give you a copy of some of these graphs and charts that you can go through in more detail. They're very, very good just before you go to sleep, I must tell you tonight. Believe me, just ask me for the graphs and charts. The manufacturing shift that has occurred in this world to China ultimately is the US's loss. And the charts and graphs show how dramatic that shift is. In terms of countries that have replaced the United States with China as their bigger trading partner, and this chart really refers to if you were trading with the US and China over the last 25 years, who was your bigger trading partner? Well, in 2000, you can see most of the world had the United States as their bigger trading partner in 2000. Just fast forward 24 years. So here we go. The blue countries clearly had the United States as their bigger trading partner than the US. Fast forward 24, 25 years, and you can see how the map of the world has changed. It is a remarkable change, and a change that, in a sense, from a global perspective, weakens the role of the United States, and obviously, not just through trade, but through politics as well, strengthens the hand of China. And this global phenomenon really, I think, and I come from a part of the world, African continent, I live in Cape Town, much of my work is in Africa, where of course you can see that diplomatic initiative from China through trade and investment in particular that has usurped certainly the West, certainly the Europeans, and to a large degree the United States as well. China now becoming the major source of investment, of foreign direct investment across many of the developing countries of this world. So it really is a new and complex global environment. And when we're looking at issues, we often look at Trump and we often look at issues of your particular individual business and your particular sector. But just look how crowded the global stage is when it comes to who has power in the world, whether it's political power, whether it's economic power, whether it's technological power. All of these different pieces of the puzzle represent the different power brokers in the world at the moment, from China to India to non-governmental organizations, to criminal gangs and other related elements as well, to new rising, what we call middle powers, middle political powers in the world. It's a complex global environment in which increasingly there is no one regulator. Now, you spoke about regulations in your industry in the talk before me. That's how well I understood the speaker before me, I must tell you. But there's no one regulator globally. And I think that creates also an element of volatility in the world. It's often referred to in political science terms as a G0 world, where no one, including the United States nor China, has the predominant power to set the rules of the game. So from a geopolitical perspective, that's the world in which we increasingly live in. But what's important to look at is the makeup of the global economy. And this is a chart of which countries in the world are increasing their share, their GDP share, of the big picture global economy. And whilst you don't have to look at all the detail, the top green bar is China, and the bottom blue bar is the United States. And you get the idea of China's contribution to the global economy, which is increasing. The United States' contribution to the global economy, which is subduing or plateauing, as one would call. And you can see there the same color as my trousers, actually, India, which is also rising and becoming a larger contributor to the global economy. India and China, and ultimately other important societies like Indonesia are going to be the important countries to watch over the course of the next few years or so. It's not just economic. When there is economic growth and dramatic economic growth as well, countries are realigning politically. And again, we can see in this study from Capital Economics that looks to see where political alignments are going to be or are at the moment. Countries still, some choose to lean towards the US and a Western basket of nations, but increasingly, as a result of the rise of the importance of China and the ability of China's economic and investment footprint to be felt in every part of the world, you can see large parts of the African continent, large parts of Asia, parts of Latin America as well, South America, now politically more aligned with China. That's certainly been part of China's mission as well through her trade and investment. There are those political analysts or theorists who would argue that we're in an era in which the United States as an empire. Now, don't ask me exactly what defines an empire, I must tell you, but as a power broker in the world, some theorists would argue that the United States is now in decline in terms of, let us say, its geopolitical influence, and we're at the beginnings, in fact, of an era of the rise of the East or the rise of China as well. It's a debatable question as to what constitutes an empire, but I just mention this to you because it's the era in which we live, and it's quite a dramatic change for us as well going forward. So, when you look at that big macro picture or that big scene set in the world as to where we are at the moment, we have a new US president. Still with me, everybody? Still here? Yes, still here. Everybody on the far corner, still here. Are you waving? You're waving. Good. It means you're not looking on your phone when you're waving, so that's great. Let me continue by simply put, it's now the stage of the world, now, given what I've said on the macro environment, where we have another term of Donald Trump, an impatient president, as I think you've noticed, unorthodox and unpredictable as well going forward. Trump's style, as we've seen, is transactional. It's not so much ideologically focused as to what he can get out of the deals that he does, ostensibly for the United States as a country. And he's prepared to tackle both his friends and enemies in a relatively similar way, not afraid to critique or criticize friends just as much as he would do enemies. And sometimes, in fact, it seems as though he would treat enemies even more friendly, in a sense, than his long-standing friends. But this is an unpredictable leader who thrives on that unpredictability, who thrives on creating uncertainty, creating, in a sense, chaos around himself. He would argue, I think, that this keeps everyone on edge, not quite knowing what he is likely to do. And as we stand here on the stage, the issues relating to the current war between Israel and Iran represents also, in the US terms, as Trump has said overnight, I'm not sure if I'm going to join the Israeli war effort here on the Iranian nuclear sites. Maybe I will, maybe I won't. That's what he said overnight. It epitomizes the issue of just this uncertainty that he can create about himself. Of course, for Donald Trump, and I think some of his critics would argue that he has something of an emperor complex as well, wanting to be seen to lead without checks and balances, without, of course, the debilitating effect very often of opposition. And I think this particular style of his presidency is going to be an ongoing issue within the United States. Now, global scene set, and you've got sort of Trump as the new, as the Americans have said, the new sheriff in town. And I didn't say that. Trump's press secretary said this not that long ago. Now, I thought it's important here for a Greek audience to put up a good mathematical formula in front of you. And since you're all involved in some form or other in financial services in particular, you should be well aware of what this mathematical formula is. KPMG didn't give me any prize to hand out to you. What is this formula? So, any guesses as to what it is? It is Trump's tariff formula, the reciprocal tariff formula that was announced about 2 months, 3 months ago. And this, what I would call red light, green light tariff environment in which we find ourselves in, has caused substantial concern in the world and has already had an effect on the global economy. And this tariff policy ultimately is at the forefront of upending both economics in the United States and outside of the United States, and also recreating new geopolitical relationships, not just between the United States and her trading partners, but perhaps also between other trading partners across the world looking for alternative trading arrangements outside of the insecurity from the White House, from Washington at the moment. The big issue, I suppose, about tariffs, other than the impact upon domestic economies around the world in terms of the US's trading partner, is the possibility of increasing prices. After all, tariffs to me are a consumption tax. If I'm going to buy a MAGA hat made in China, I've got a large selection of MAGA hats back at home, as you can well imagine. If I'm going to buy that MAGA hat made in China, chances are I'll pay more for that MAGA hat right now or in 3 or 6 months' time. Companies in the United States currently look as though they are absorbing some of these interim or immediate tariff hikes that we've seen, although many of them are still being negotiated, as you are well aware. But the question is, for how long can these corporates absorb a large component, and at what point will those tariff hikes filter through into rising prices for consumers? Clearly, there will be a mix of effects. The mix of effects will see consumers having to fork out more for goods and services, particularly in the United States when they go to Walmart or they go to Target, and certainly also for corporates who are likely to see some of their results looking that little bit more unpleasant should they have to absorb some of these tariff increases, all leading to, broadly speaking, a growing economy that is beginning to stagnate, not just in the United States, but certainly also globally as well. The global trade outlook has largely worsened as a result of tariffs. And of course, the reality check for the United States economy is that its GDP is starting now to reflect these uncertainties. No market wants uncertainties, and the level of volatility and uncertainty baked in to the tariff position has created a pretty depressing effect on US GDP in the last reporting period. I expect this to come back somewhat in the next quarter, but nevertheless, lower GDP figures look as though they are on the cards for the US, certainly for the rest of this year. And that effect of tariffs on the US economy and on the global economy now, of course, has resulted in projections for global growth dropping quite dramatically in terms of the World Bank's latest report out just last week or so. If you look at the overall projections for the global economy for the next year or so, you'll see that the big hit is for the United States, a 0.6% drop in the projections of the US economy. That is an enormous drop in percentage terms over this year, and of course stagnating ultimately in terms of growth into next year as well, at around 1.5% GDP for the US. For the euro area here, pretty uninspiring growth going forward, but nevertheless the eurozone holding its own, and there are some good points that I want to raise in favor of the eurozone at the end of this presentation. Chinese growth looks as though it's well entrenched now at below 5% or so. India looks as though it's still, to me, the strongest of those big developing markets. 1.4 billion people in India, and that market is still, the GDP figure is still growing at about 6% or just over 6%. Very impressive indeed for India going forward. The result of the tariffs politically, though, have caused a drop in support for Donald Trump. And again, using Donald Trump's Fox News network screenshot here in this presentation, it's worth noting that Trump's approval ratings after his first 100 days in office are relatively low. They've come back a little bit since the issue of tariffs has been put on ice, but nevertheless, they are low, and I think we've seen the issue of the public opinion begin to impact Donald Trump, and also, of course, the volatility in markets impact Donald Trump as well, resulting into what one could call a partial U-turn or a partial reversal of some of the worst aspects of the tariff suggestions that we've seen. But ultimately, for all of us, tariffs are here to stay, and we will have higher tariff rates than we've enjoyed before. And from a US domestic perspective, there's, I suppose, good reason to have tariffs. It's a pretty good income earner, I must tell you, and it can offset rising debt in the United States. It can also help to weaken the US dollar. Tremendous, huge capital repayments on US debt coming in the next short while. There's every good reason why the United States would want to try and lower their overall tax rate and replace that with a higher contribution of tariffs. So when you look at the role of tariffs from a US domestic perspective, you can make a case for tariffs, but not at the levels in the way it was introduced, and that can undermine US growth and undermine exactly what the tariffs are intended to achieve in their theoretical form. The threat of tariffs, though, and the unresolved nature of so many of these tariff negotiations are going to continue to be used as leverage. They're a continued threat from the United States. So even though Keir Starmer will enter into a trade agreement with the United States, there's always the threat dangling over the head of Starmer every time Donald Trump opens his mouth. It's a way that Trump can lock in a degree of compliance by keeping those threats going. As I've said, US national debt is enormous. It's climbing all the time if we had a real-time ticker. And of course, we've seen the effect of tariffs and the effect of a diminishing confidence in the United States have an effect on eroding or reducing the value of the US dollar overall. Of course, significant also, it helps, of course, debt repayments in the United States, but a lower US dollar also can put pressure, of course, on imported inflation back into the United States. So whilst it may work in some ways, it has a risk in other areas as well. The big question often asked of me is this erosion of confidence in the United States and the erosion of the value of the US dollar, is that going to shift the global reserve currency away from the US dollar? Look, if you look at the chart and you look at the light blue part of this chart there, that's the composition of the official global reserves, you can see the US dollar has reduced only marginally to just below 60% in terms of global reserves, global reserve assets, or global reserve currencies. There's a long way to go to really reduce the command that the US dollar has in terms of the global economy. So I don't see this in the short term, but this erosion of confidence and what is also an extraction of investments out of dollar or out even of US equities, which can exacerbate in the next short while, that can have a dampening effect on sentiment about investing in the United States. And obviously also, and you saw it overnight in fact, the disagreement between the president and of course the chair of the US Fed over monetary policy, the disagreement over interest rates in particular, can undermine the value of an independent institution like the US Fed. And an attack on that, and Donald Trump certainly has critiqued Jerome Powell, also I think is a concern in terms of how institutions, in particular Federal Reserves, have to remain absolutely independent of the politicians who would like them certainly to adjust their thinking to the way the politicians would. So there is a potential conflict coming on institutions in the United States, and I flagged that going forward. In terms of the US's relations with China, which is up and down, I think that there's common interest in the United States between the Democrats and the Republicans on trying to roll back the power of China that I've highlighted to you in some of those early slides. But China has leverage as well. It's the manufacturing powerhouse of the world, and it dominates in the mining and the refinement of rare earth minerals. And those rare earth minerals, increasingly important in many of your businesses as well, sitting here today, means that China now has the ability to play what we would call a rare earth card. It's not just the US being able to set the terms. China has that ability now as well. And I think we're entering into a period of strategic stalemate, where both China and the United States, in a sense, have the power. This can lead, of course, to conflict, but it can also lead to greater mutual respect, especially as both superpowers now have leverage. On the global stage, Donald Trump certainly has said that he wants to disengage the United States from other conflicts, parts of the world. We know that he doesn't want to fund, in a sense, or underwrite the global security order. And you've seen his statements in particular on NATO. He has a disdain for global or international institutions as well. But the reality of the situation is that Donald Trump may be Donald Trump, but the Chinese are moving globally to extend their footprint, as I've indicated. The Russians move globally to extend their footprint, particularly on your doorsteps here in Ukraine and perhaps in other parts of Central Asia as well. And it's not as though the US can simply theoretically announce its disengagement or its lack of willingness to involve itself globally. It will also be motivated by the competition coming from these two other great powers as well. And that's why I expect the theoretical desire to disengage from the rest of the world is going to be countered by the practicalities of having to face competition, and particularly expansionist competition from both Russia and from China over the course of the next number of years as well. The US, too, finds itself in an awkward position. It's reducing aid. It's a soft power commitment to many developing parts of the world, whilst at the same time, China is increasing her diplomacy, increasing her handouts to many parts of the world. There's another game being played. It's not just a military game on the one hand, it's a game of soft power, of influence, of courting diplomatic relationships across the world. And China certainly has won out on that over the last decade and looks as though she will going forward as well. And China will continue to try and exert influence, especially where the US withdraws. And you've seen the Chinese leader on a mission, certainly across Southeast Asia, and you'll see him on a mission elsewhere as well. It's a different world. It's what I would call a world that is multi-aligned. It's a world in which countries are being pushed and pulled from one big power to another big power, more fragmented than ever before. And ironically, whilst both the Democrats and Republicans want a weaker China, this, in a sense, different perspective from the United States will allow China the additional power to extend her influence as well across the world. So, a few issues just to raise for you to ponder upon as you are having your events during the course of the day. This is an era in which trade liberalization is entering unknown territory. We spoke 10 years ago, 20 years ago about globalization, global trade, offshoring, outsourcing. Global trade has plateaued over the last short while, changing the way we, I think, are going to do business in the future. The psychological impact of trust in the United States is eroding, and that results in more global fragmentation as countries and corporates look to shore up their own supply chains, their own geopolitical interests with many other parts of the world. And that erodes the embrace, in a sense, for many Western companies, even of the United States, and opens the door to other trading arrangements with other powers in the world as well. There's an ongoing battle between the United States and China, as I've alluded to. But the Chinese, in particular, the Chinese Communist Party, from an ideological point of view, see economics, trade, and technology as a battlefield on which to fight for dominance. Economics, trade, and technology. Countries, therefore, will increasingly be stuck between the superpowers of this world. And there are new rising superpowers as well, with regional influence as well. Countries and corporates, and some of you sitting in this room, may build new trade corridors and rethink their own geopolitical economic alliances. And when it comes to being resilient in business, and when it comes to competing in this new global environment, yes, you keep your options open. You build those new trade diplomatic corridors between corporates and other areas of the world as well. On the technological front, one could give a whole talk on the geopolitics of technology in particular. But there is something of a techno-economic contest in the world at the moment. Those who rule in key technologies ultimately will rule the world. And that battle also is being fought out right now, yes, between the US and China, but I would also argue that Europe has a role in this future tech-oriented world, which can offer Europe a sense of power that perhaps it needs to compete with these other key actors and players. So, expect more regionalized trade agreement, more strategic trade rather than free trade. Perhaps the era of free trade ultimately has left us. We are going to see multipolar diplomacy, where countries will look at country A and they'll look at country B and they will try to steer that middle path, if they can, between different countries. There are some very good countries in this world who are able currently to steer that path, although it's becoming even more difficult. India has a foot, in a sense, in the United States. It has close relations with China as well, close relations with Russia as well, historically anyway. Brazil and Vietnam as well, countries who will try to have a foot in all the different camps of this world. And countries ultimately should be advised that they need to play all of the countries to their own benefit where it can be done. But of course, it depends on leadership and the ability in particular of leadership to get that right. It's not so easy. There is a combative attitude in the United States currently towards adherence to the US Constitution. And I do issue a warning here that in terms of domestic stability in the United States, the Trump administration's combative way and aggressive way of attacking aspects of the US Constitution can undermine stability in the United States as well. And of course, when we look on the global stage, the failure to support traditional allies from the United States simply is likely to strengthen strategic enemies of the United States as well. These themes, I think, are going to be with us. These themes are going to create issues and complexities, along with rising domestic tensions. The graph on the left are protests, economic protests, that have increased in China over the last few years or so. And of course, on the right, from the recent protests in the United States as well. So expect a degree of rising domestic protests in both of the two big powers in the world. Ultimately, we are here at a juncture globally where we are likely to feel an ongoing and bumpy transition from the sort of US exceptionalism narrative that we've seen in the last 30, 40, 50 years. And I think this exceptionalism narrative is going to be tested, certainly as the Trump administration takes more domestic governance risks as well. Finally, something about the European Union. And I put that little video clip here on the screen. You can read it here. The European Union was formed in order to screw the United States. That's the purpose of it, said Donald Trump very, very recently. Now, certainly, the tensions between Trump and the EU are certainly based upon a number of factors. There's this disdain amongst elements of the Republican Party to liberal theology in Europe, to the sort of freedoms that Europe enjoys and promotes culturally very often as well. And you've seen J.D. Vance speak extensively about this over the last few months. So there are deep ideological differences between the right wing of the Republicans and the ethos of the Europeans. And of course, there is also a disagreement fundamentally as a result of the Russia-Ukraine war about Trump's desire to rehabilitate Russia in the global order, and clearly the EU's desire to keep Russia at bay and to keep her, of course, out of global economics as a result of sanctions and that Ukraine conflict. But there is an opportunity for Europe. There's an opportunity for Europe amidst all of this firmament that I've spoken about. There's an opportunity for the euro to benefit from the US dollar's current weakness, and you've started to see a shift in global investments into the euro as an option, an alternative to the US dollar. So there certainly is, I think, some benefit in the midst of all of this chaos that we see globally. European growth, time's up, it says. European growth is looking to be that little bit more positive than we've seen in the past. And for all of you here in Greece, you've seen your stock market perform relatively well. In fact, not bad at all from a global perspective. One of the world's top gainers this year in markets is the Greek Athens Composite Index. European consumers are looking that little bit more healthy. And again, good benefits coming, in a sense, to many of your consumer industries. A potential solution to Ukraine still remains a problem. And Russia's continued aggressive stance towards many of her neighbors as well is a challenge yet to be overcome, as is the amount of cash that Europe has to commit to her defense spending, and the choices that Europe has to make between finding enough cash for social services and, of course, compromising over how much to spend on defense going forward. It will take deft leadership, I might add, of Europe in order to take advantage of not only the challenges, but, of course, the possibilities. And one of those big challenges to me is regulation. I hate regulation with a passion. And I'm sorry to say it to any politician here in this room who likes regulation. The deregulation is going to be ultimately a key driver of Europe's better performance if it is going to become a competitor globally in this missing and messy environment. One thing we can't avoid, by the way, we can't avoid the issue currently of declining birth rates across the Western world, and particularly here in Greece, one of the fastest aging populations, clearly affecting productivity and, of course, healthcare and welfare spend as well. It's a challenge that Europe and many other parts of the world have to overcome. So, a couple of minutes over time, 3 final pictures, I suppose, for you. Yes, I've spoken about a volatile and unpredictable world. It's a world spinning, in a sense, and it's spinning in all sorts of various ways, depending on what time of the day Donald Trump gives a press conference. But it's also a very unpredictable White House as well. Friends and enemies shift and mutate seemingly on an hourly basis, and we're going to see this as part of the Trump presidency. The volatility is not just in policy, it's also in Trump's inner circle as well. So finally, I think it's a world in which the United States is trying to recover itself in the face of competition, but the competition from elsewhere is strong and will give the United States a run for its money. And understanding all of these pieces of the puzzle, where to position yourself, how to secure your business in particular, is ultimately going to make or break your business and will be the central challenge for all of us, for an analyst like me, and for participants in the financial sector like you. That will be your ultimate challenge over the next medium to perhaps even long term. Thanks very much for listening to me today.